Hi there, this is Rob, and this is the 2-minute overnight overview for Wednesday. In yesterday's overview, I shared a study that provided moderate hints of a downside edge. No further studies were identified by the Edge Finder when it was run about 15 minutes before the stock market closed. That left us with the odds sheet to consider for evidence. And nothing here really stood out. ES showed a very moderate bullish bias based on price action and internals, but when looking at seasonality, the numbers were weak. This all averaged out very close to break-even odds. Most of the other indices in ETFs showed near break-even odds as well, with just diamonds showing a moderate upside inclination. So a study that gave a mild hint of a downside edge, and an odd sheet with break-even odds all meant a night on the sidelines for me. But let's take a quick look and see how it played out overnight, and then I'll share some research. It didn't take long for the bearish inclinations shown in yesterday's study to begin to play out. ES began declining in the early evening and fell for most of the night, dropping as much as 8 3/4 points at its lowest. Around 4:30 a.m. it reversed course and moved back up near the break-even line. In the end, our largely edgeless setup resulted in a mixed open. ES opened down 1.75 points, while SPY opened up 6 cents. So let's look at the daily chart and see where we are at currently. Basically, it appears ES is in the middle of a choppy consolidation period as we begin September. One notable about September is that since 2000 it has been the worst performing month of the year on an overnight basis. Here's an equity curve which demonstrates holding 10 contracts of ES overnight during September each of the last 12 years. You'll note that the vast majority of the losses occurred in September 2001 following the 9/11 attacks. This would skew any statistics looking back that far. But even if we take out 2001, September's performance has still been the worst of any month. So, as we move throughout the month, traders may want to keep in mind the inclination for the market to experience outsized down gaps versus up gaps this time of year.